All right, Ken Orange Theory Trader back with you with another video. And so we're just going to talk about a simple risk management tip that can save you a lot of money. So we have here a simple 8-hour candle range theory trade, candle 1, candle 2, candle 3. So that's there. So let's drop down to the 5-minute now on the 1 a.m. 8-hour chart and see what we could have seen. Now, let's say, though, for the sake of this example as well, though, that you're going to start with a $100 account. Okay, so $100 account. You decide you want to risk 10% of it, which is 10 bucks. Instead of going in all 10 and trying to do a tight stop loss, what I want you to do is split your risk in half. That means 5 and 5. Okay, make the first entry worth 5 bucks and make the market prove to you that it's worthy of your money. But how is it going to do that? Here's the easiest way. Okay, let's go over to 1 a.m. for where candle 3 started on Friday. So that was right here. Yeah, this candle right here. All right, so it's the open price of the 1 a.m. candle. I'm going to get rid of the candle ranges, high and lows. Okay, all right, so this is 1 a.m. open right there. Okay, so here's the trick. What you want to do is after you take your entry, obviously the first entry should be in profit before you get down, before you add another one rather. But you want to be sure that price closes above the candle before you take a second entry. So what do I mean by that? See how you could have entered, say, for instance, and obviously you always want to wait for the candle to close. Say you enter right here, okay, going long. Notice how none of these candles closed above this candle's high. This is the candle's high right here. Let me draw a little line here. This is the candle's high right there, right? So you have to make the market prove to you that it is worthy of another entry by waiting for the high of your entry candle to be closed above. That didn't happen until right here. So your first entry, let's say if you got in at 120, you think, okay, I'm feeling good, but I'm only risking 5% of my account. Worst case scenario, I'm only going to lose 5 bucks. Okay. And you may or may not. But the thing is, this is mainly for keeping in mind the worst case scenario. All right. So once your entry candle gets closed above, then put your second entry in. So we'll look something like this in terms of the positioning. So let's say we'll do this one here. Let's see if we could have got away with a 10 pip stop loss. Yeah, that would have been fine. 10 pip stop loss there, 1 to 3. All right. It came close to getting stopped out. Right. And with the spread, you may have been stopped out. Okay. But it didn't hit it. But the thing is, your second entry doesn't come until right here. And you can keep the stop losses the same because when you're trading candle 3, you're really looking for straight line price with very little consolidation. And then when it does consolidate, it shouldn't pull back all that much. Sometimes it will because it did here. Now this obviously the price target wasn't the same, but with candle 3, sometimes they can really just go. So while this was a 1 to 3 right here, this was like a 1 to 1.65. And if you want to scale in more, you can. But at the end of the day, if you want to scale in, just be sure that you're scaling in on strength. I know sometimes people like to scale in on pullbacks. I'm not going to say I don't scale in on pullbacks. It depends. There's ways to do that if you can keep the risk the same, but this video is not about that. It's more about adding to strength. Okay? Don't resist the temptation to buy right here, and then you want to buy again down here, and then buy again down here. You don't make a habit of heavily averaging down. Okay? Buy into strength. That way, price pretty much, it only came back like right here. But by this time, it only pinned it and then kept right on going. Right? Because this low of this second entry candle here didn't get closed below. So really watch how the candle opened and closed. And of course, obviously, fair value gaps, you can keep that in mind as well. I'm sure there were some that offered support and resistance here. But this video is not necessarily about fair value gaps as more as it is about risk management. My point is this. Whatever your risk is, cut it in half. Make the market earn the second half. Even if you only want to risk $1 per trade, your first entry, make it worth 50 cents. and then go from there. Make it earn the other 50 cents. That's my point. Okay, cut the risk in half. Don't go all in on the first trade because you can always be wrong. Matter of fact, I guarantee sometimes you will be wrong. And sometimes on these trades, you will be wrong. You can take 2 entries, you got a good feeling about it, and it'll still come back. But when you're right, you're going to make so much more. So again, this is just really about protecting your downside. So again, if you want to split the risk into 3, that's fine too. If you want to split the risk into 4, that's fine too. I say half though, because I don't want to manage 1,000 positions. But if you want to compound and scale the account, you gotta add to your account unless you already have a lot of money to begin with. So that's my tip for today. Split the risk and definitely protect your downside, and then enjoy more upside as the trade goes into your favor. Okay, as you see these strong closes, you got to close there, another close. That's what you should be seeing. That's how candle 3 is supposed to behave. See how each candle beats the prior high, but when they start to stall out, that's what you don't want to see. Okay, this right here, strong momentum to the upside. That's where you should be buying. Okay, so buy strength, don't buy weakness. Okay, so that's the lesson there. Split the risk, only add when it makes sense to. Hope you appreciate the video. Don't forget to like and subscribe. Have a great rest of your day, and please take care.